What's going on, everybody? Welcome to the David Greene Show, Real Talk Real Estate. Today, we are going to be getting into an issue that is prevalent in the world of real estate investing. But if you're not buying a lot of real estate yourself, or if you don't own a lot of it, you might not know about it. And as you might have guessed from the title, that is going to be homeowners insurance. It is getting increasingly harder to get. What you get for it is becoming increasingly less, and it's becoming way more expensive than it has ever been in the past. I'm going to be talking about why that is, what's leading to this, what's going on behind the scenes at a macro level, and then at a micro level, what can actually be done to try to fix it. Got a couple different videos that I'm going to be reacting to and sharing information with you because there have been some investigations that have been done on this. As a real estate broker in primarily California, we come across this problem all the time. We have people we put in escrow. They can't get homeowners insurance, or the insurance is so much, it's actually ruining their debt to income ratio, and they're dropping out of escrow because they cannot get a loan to buy the property. So this is a big problem. It's a legit problem, and it isn't being discussed very often because it's not inspirational. It's not fun. It doesn't make you think you can do it and run out there to buy real estate. It's actually hard. It actually sucks. It's not fun when you get told your house needs a new roof, or we're dropping your insurance, or your insurance is doubling or tripling, or doesn't matter what you do. We don't want to insure in your area or in your state. You are on your own. So we're going to be talking about what some of the states that are having this happen to them are doing. Because if you live in one of those states, this is very relevant to you. But what if you don't? You still want to pay attention to this because it may be coming to a state near you. You may live in one of those flyover states thinking, well, that happens out there on the coast. It doesn't happen to us. Not true. All of California's problems, folks, are moving to other places. I just want you to understand this. When the people that are in California leave California, they go to where you live. And by that, what I mean is the people that are freeloaders, the people that go to a state and say, I want free stuff, so I'm going to go here. When you live in the Midwest, when you live in the South, when you live in the Northeast, you tend to think that's their problem. It's their problem right now. It becomes your problem. It will. Because when there's no more money left to drain out of California, where do you think those parasites go? Do you think they just die? No, they need a new host. They need a place that they can get their needs met by. And if we don't have a government that is providing solutions for how these people can make their own money, how they can educate themselves, how they can move along the capitalistic path, they're going to end up where you are. And the same is true for insurance. These high premiums are going to be passed on to where you are, especially if the federal government gets involved. If the federal government gets involved in coming up with solutions for this, they're going to rob Peter to pay Paul. They're going to take from this state to give to this one. So if you're in this state, this is information you're going to want to hear. And if you're over here in this state, this is also information you're going to want to hear. So we're going to get into it shortly here. A few housekeeping methods here. Make sure you subscribe to the channel if you haven't done so already. If you would like to listen to this commercial free, head over to Spotify or Apple Podcasts where you can download my podcast. Now, episodes like this are only available on YouTube, but I do have a show that comes out every week. We're going to be moving to 2 a week, Mondays and Thursdays, a community-based show, which is what you're used to hearing, where I take questions from the community and answer them for everyone to hear, as well as an interview style show. The first one's coming out on Thursday, and guess what? It's going to be about insurance. That's right. The first ever interview on the David Greene Show is going to be with an insurance agent talking about why prices are getting so high and what people can do to try to combat this. So I thought I would go live and react to some news stories about this very same problem. While you're listening, remember you can comment on YouTube. If you're not listening to this live, that's okay. You can still comment on YouTube. If you would like to have me answer your show, your question, that is, head over to davidgreen24.com/ask, and it will be featured on the show, The David Greene Show. So head over to davidgreen24.com/ask, where you can submit your question. There's also a chat feature on that website that goes directly to my phone. That's right. I monitor that and I check it, and I sometimes answer people's questions there. So if you need to get put in touch with a loan officer, if you want to learn more about Spartan League, that's my mastermind. If you need a real estate agent, if you want to ask me a question, whatever it is, you can use the chat feature on davidgreen24.com. You can also look me up on the Minnect app. Valuetainment put that together. I'm a part of it. So if you want to ask me a question, you can download the Minnect app and you can do it there. All right. Let's see what we got here. Anthony Vasquez says, I'm in Florida. Daisy Day, Miami. If you can speak Spanish, you understand where she's from. Says insurance affects not only homeowners, but businesses, and that's going to drive up costs of goods and services. Then it creates a cycle of prices going up and up. Great topic. All right. Thank you for that. Let's get into it.
Record high inflation may have people questioning whether homeownership is a good investment. Property taxes on the median single-family home have risen by more than 25% between 2019 and 2023. There's also been about a 20% increase in home insurance premiums between 2021 and 2023, according to insurance comparison company Insurify. Insurify estimates rates will rise another 6% by the end of 2024.
What many have failed to anticipate is the rise in both property taxes, and that's correlated to the rise in the value of their home, something that at some level helps them, as well as the increased cost of paying for that insurance.
82% of recent homebuyers said they regret their purchase, with 44% saying they've had to take on additional debt to maintain their standard of living.
Just because a person may own a valuable home doesn't necessarily mean that they're financially set. There are other costs associated to maintaining that property.
Unfortunately, a lot of people go into buying a home and they
Now, if you're a real estate investor, you already understand that, because depending who you get your information from, you've probably been taught it's not just your mortgage, which is principal and interest. You also have property taxes, property insurance, capital expenditures, repairs, vacancy, maintenance. There's a lot of money that goes into owning a home, but not everyone gets told that. Not everybody is listening to channels like this one where they get this information so they know what to expect. A lot of people get completely blindsided when they buy a house and they realize that you can't just tell the landlord that they need to fix something. You got to fix it.
don't understand that their monthly payment could change.
More than 1 in 4 homeowners with mortgages spent more than 30% of their income on housing costs, implying they're cost-burdened. Here's why home payments are skyrocketing and how people shopping for a home can prepare.
Homeownership is the primary path toward wealth creation in the United States.
Single-family homeowners.
I got to say, I agree with that. You guys, let me know in the chat if you think there's a better way to build wealth in America than owning a home.
Accumulate an average of $225,000 in wealth from their homes during a 10-year period, according to...
Okay, $225,000 in wealth over a 10-year period, and that's according to the National Association of Realtors, which means that this number is probably coming from the national average. Imagine if you lived in a high-growth area, Florida, Texas, California, Washington, parts of New York. That could be doubled or more. Okay, the equivalent of having a property that builds you wealth, and this is not including cash flow. So these are not real estate investors that are getting money from cash flow. Also, this is just equity creation from just owning a house, which is a result of inflation.
To a 2022 report from the National Association of Realtors.
That wealth sort of boils down to being primarily only on paper, and the time that you cash in that asset is when you sell the home.
There's a saying, house rich, cash poor, meaning people may own a valuable home, but that doesn't always translate into having cash on hand.
Home prices have been increasing over the last few years, and it's outpaced income for the average consumer. That's a problem because that creates an affordability crisis for the average person.
This can be a problem because as the value of a home rises, so does the cost to maintain it. Property taxes are one of the costs that can increase with the value of the home. Homeowners whose properties were reassessed between 2019 and 2023 amid skyrocketing valuations saw an increase in taxes. The median taxes for properties that were reassessed increased more than $600 for the year between 2019 and 2023.
Local municipalities can do these. Each local government has a different form of them in certain areas where they go, we're going to do an assessment because we need to build some new infrastructure for something. And this is how we're going to raise the funds for it. And so that's another important thing with your realtor is to talk about, has the town and county been talking about any sort of assessment like this coming up?
All right, what are assessments? Most people are not familiar with these, and that's bad. It's really bad that you don't know. Let's talk about where they typically occur, which is in condos or anything that is governed by a homeowners association. When you buy a condo, you're not getting the same type of title that you get when you buy a single family home. When you buy a single family home, you own the home, the land on the home, and it's all yours. If something goes wrong in that house, it's your responsibility. When you buy into a condo, you are buying the right to use a portion of that building, and you are buying the title to that portion of the building. But portions of it are shared with other people. So you're sharing a wall with somebody else's condo. You're sharing a roof with other people's condos. So a portion of that building, the part you live in, is yours. And a portion of that building that you don't live in, the roof, the plumbing, the shared walls, the parking lot, the landscaping, the pool, whatever amenities are there, are shared by you and other people, which means you get to use them just like everyone else does. You get to use the roof, you get to use the pool, you get to use the gym, you get to use the parking lot, you get to use the landscaping, but you also have to pay for them. So you have two different things that you're using and paying for. When you have a single family house, you have one thing that you're using and paying for. It's just your yard. It's part of your property. Well, with a condo, you're going to make your mortgage payment, you're going to make your insurance payment, you're going to make your property taxes. Then you're going to have an HOA fee that is going to cover all the other parts of that building. Now, the HOA fee is supposed to collect money from you. Sorry, the HOA is supposed to collect an HOA fee, which is money from you and the other people that they keep in a big reserve so that when something breaks, they pull money out of that to fix it. However, they never do this right. They always waste money on dumb shit. So what that means is when the roof goes out, a tree falls over, the plumbing has to get replaced, the pool needs to be resurfaced, the parking lot has to be restriped, whatever your issue is, they collect an assessment from all the people to cover that extra expense they didn't think. That could be as low as $2,500. That could be as high, in my case, of six figures for a property that a couple properties that I own in Maui. They said, hey, we need $110,000 plus you're going to have nobody that can occupy this unit for 3 months. Plus, when we rip it apart, you have to pay to put it all together because we got to fix the plumbing in this property that's old. Wild how that can happen. What she's mentioning here is that if the government is forced to provide insurance because not local, but corporations that typically have provided it, private companies, which we're going to talk about later in this episode, don't do it, they may go to all the people that live in that area and tax them, which is the same as an assessment, and say, we need you to kick in money so that we can provide insurance for all the other people that are here. And if you are not aware of that, if you don't know the politics of where you are and where you're staying, you may have insurance that's good, but they're going to collect they're going to collect money from you to go pay for the people who don't have insurance. That's really bad. That's why we're talking about this today. You want to be aware of this because you may be managing your own finances just great and saving money. And then the HOA where you live in that you own that condo comes to you and says, hey, we need another 50 grand. And boom, they didn't manage their money well. Now their problem becomes your problem. And that's because you bought into your community. When you buy into a good community, all of the ships rise with the tide. When you buy into a bad community, all of the ships sink with the tide. So it's now no longer enough to only think about yourself. Now you have to think about everybody else in the area or the property or the location where you're buying.
Have you heard anything? If your realtor says, I don't know, then go get a new realtor right away because they should be following all this stuff because they are your advocate and they're your guide.
An expert had told me that property taxes rarely go down. They usually go up.
Property tax increases in the past 4 years varied by state, with New Jersey, Connecticut, and New York seeing the highest average property tax increases, while West Virginia, Alabama, Arkansas, and Mississippi saw the lowest.
It's always an option for homeowners to challenge essentially the tax assessment that they're getting relative to their own property. And I've been made aware of, for example, some attorneys that actually are in the business of doing that for homeowners. And I've known of some people who said, hey, what does it hurt to challenge that assessment? I would ask, well, first of all, is it worth your time and potentially your money to challenge that? But if you're really in a situation where you think it's unfair or inaccurate, then I think that's where the challenges really do more properly come into play.
Homeowners insurance is the other major expense that can fluctuate after a home purchase. The average annual homeowners insurance rates in the U.S. increased from $1,984 in 2021 to $2,377 in 2023. One estimate from Insurify predicts average annual rates will rise to roughly $2,500 by the end of 2024.
In the last couple of years, we've seen this spike, this huge increase, and it is because we are having more natural disasters in places. We're having more wildfires, we're having more flooding, we're having more mass destruction events, and those have to be recouped by insurance companies somehow.
With the increase of hazardous weather, lots of major insurers are leaving areas, and it's not limited to California and Florida anymore. Like, we're seeing that in Colorado and
All right, there you have it. It starts in California and Florida. This is where the insurance problems are the worst, and that's where the majority of the videos we're going to talk about today are coming from. They're dealing with California and Florida homeowners, insurance companies, and premiums. However, she's acknowledging it starts there and it spreads to other areas. She's talking about Colorado having some wildfires. Look at this picture. That's absolutely tragic that this is happening, and it's going to move into some of those other states.
other areas where wildfires, tornadoes are common.
Those states are seeing the biggest spike in insurance rates, with Florida leading the pack. The average annual rate for insurance in Florida was nearly $11,000 in 2023, which is more than $8,600 than the U.S. average. Florida cities make up 6 of the top.
That's almost $12,000 a year. That's almost $1,000 a month to insure a property in Florida, which is a state that everyone is moving into. This isn't like everyone's leaving Florida. I mean, Florida, Texas, Tennessee are probably states that are seeing the most influx of people moving into them, and it's still that expensive there.
10 most expensive to insure in the country.
There are some states that actually have legislation in place that insurance companies can't raise your premiums more than a certain percentage each year.
Insurance.
California is one of those states. Do you know if your state is one of those states that have legislation that stops insurance companies from raising rates? Because it always sounds like a good idea when the government tells the big bad bullies you're not allowed to raise rates. Doesn't this sound like rent control? Hey, landlords, you big bad bully, we're not going to let you raise rates. We're going to cap how much rates can go up on rent control. Well, what happens? People stop buying in those areas. People stop taking care of the properties that they have. They let them get run down because they're not making enough money. The cash flow coming out of the property needs to be enough to provide for the repairs that need to go into it. And what happens when less landlords make properties available for rent? Renters have less to choose from, and then they have to pay more for rent, or they don't get to live anywhere.
Insurance is a highly regulated and complex market, but going without it is not an option for many homeowners.
Homeowners insurance is a necessity for people, particularly those who have a mortgage, because if anything happens to the house, we need to be able to recover the cost of the damage to the home, particularly if it is destroyed. You need to either do the repair or the replacement of that home.
The cost of repairing a home has risen, which affects insurance premiums.
Obviously, over time, you want to try to make sure that you have the right homeowners insurance, whether you're doing business with the right kind of entity that is best for you, including the kinds of coverage, not only for homeowners, but more broadly that you want and need. And so we try to control the things that we can control. We try to manage the things that we cannot and try to anticipate, understanding that there's a huge array of uncertainties associated.
Does that guy not sound exactly like what you'd expect someone to sound like that works in insurance? I mean, from his shirt to that tie to the haircut to the vocal tones, could you have created more of an insurance caricature than this gentleman?
Associated with life and with home ownership. I think this is going to be a space to watch for the foreseeable future, simply because it is such a dynamic and volatile and potentially costly environment.
Take that up a little bit higher. You should feel that, like right back here.
Oh yeah, I felt that.
All right, so this
That
is
is
the
so much
first
better
video.
than
We
last
got a
week.
couple more that are going to.
I've been doing them every night.
Let
while
me
I'm
know in the
watching
comments
TV.
what you think. Have you noticed that your
high
insurance
quality
premium
care
has
that
gone
meets
up?
you
We
where
have,
you are.
I believe, somebody in the chat
Business
here
is
who
always
owns a hotel, and what he said was that his costs went up a ton, which is just going to be passed on to people staying at the hotel. He has to charge more. So this isn't something that doesn't affect you. If the costs of anything go up, the costs of everything go up. I don't know if I've ever heard anyone say that, but it's kind of that how you do anything is how you do everything quote. Like, if the cost of gas goes up, everyone that uses gas increase their prices. If the cost of labor goes up, everyone that uses labor increase their prices. Every time we vote for minimum wage to go higher, we're voting for the cost of goods and services to go higher. It's really what you're doing. You don't actually ever win. And if insurance keeps going up, the cost of home ownership is going to go up. States are going to have to increase their property taxes to make up for the difference when they're providing the insurance. And in the next video, we're going to be talking about how some states like California and Florida have the government actually providing insurance because the corporations say there's no money here. We can't make this work. We can't even really break even. We're leaving. We don't want your business.
Ways in motion. You need a mobility partner that listens and adapts with solutions customized for the short term and the long haul. Because business as usual isn't the usual anymore.
Trying to figure out how to get
Enterprise for lives
YouTube
in
Premium
drive.
to work on.
There are
my
ways for
computer. I have
prospective
no idea.
homeowners to set themselves up for success.
People who buy today with the assumption that they qualify based on the current real estate taxes or current insurance need to really do more homework to understand where they could really be in a year.
Homeowners should lean on their realtor first. And you need to look at things like how much your homeowner insurance is going to cost, even trash removal, water bill.
Yeah, I bought a couple of properties in Florida 2.5 years ago, and the insurance that I paid then is very different than what it is now. So it's not just about what it's going to cost today. It's what it's going to cost in the future. Just like the rents that you collect today are not with the rents that you budgeted for 10 years ago. They're probably much higher. The same is true of your expenses.
Bills, gas bills, how much should the electric
Which just made me think of something. If we limit rent increases, like the government saying, I believe Joe Biden was saying he wants to keep them at 5% or whatever, but insurance is increasing at 70% a year or 40% a year, and maintenance is going up a ton, and how much you have to pay someone to get them to work goes up because in places like California, we just increased minimum wage to $20 an hour. So now all the other employers also have to increase their wages. Otherwise, someone's going to say, why am I going to work for you learning a trade? I'll go work at Jack in the Box and I'll just make $20 an hour instead of $25 an hour doing the hard work of framing a house. Right now, house framers have to charge more. It really does make everything more expensive, and it hurts the person trying to run their own business, which is what real estate investors actually are. When you limit rent increases, but you can't limit all your other expenses, you just end up squeezing the people that own the property.
electricity cost last year? Can I get a history of things like the electrical bills, things that we know we can go back and see? Does your state have any laws that my property taxes can only go up a certain amount each year? That's a great question to ask if you're relocating to another state. A realtor is really important to work with because they're going to be able to answer all those questions for you. You want to leave yourself a little bit of room. Just because you qualify for $3,000 a month in a mortgage payment doesn't mean you should max it out right now. Look for.
Has anybody ever walked into a vacant house with their partner and immediately held their hand like we just saw that couple do a second ago here? I'm just curious, like walk in, shake the hand of the realtor, probably not something that happens when they're in the house.
For $3,000.
Boom, connection made, hand holding. They're also facing the camera exactly like they should be. I'm just curious if anyone has ever experienced this in real life.
$1,000 a month in a mortgage payment doesn't mean you should max it out right now. Look for something where you can get in around $2,500. If $3,000 is your comfortable budget, go a little lower than that so that you give yourself that room.
Current homeowners who are struggling to meet their monthly payments also have some options.
Start on your county assessor's website. They have a ton of resources generally. If you can't,
I love this quote. No, we don't hold hands. We split rooms and immediately start looking for defects. That's probably more so what happened.
find what you need, ask your realtor because they should be able to point you in the right direction. There are resources available.
Anybody else counting how many times this gal says realtor? If you're playing the drinking game, are you drunk yet? She's mentioned it quite a bit. I believe that she works for the National Association of Realtors or something else. But realtors, if this is you, if you can't stop saying your own name like that, this is why people don't like us.
In most states for property tax relief. And so you just need to go and learn what those are, see what you might qualify for, but don't just assume I got to quit going out to eat. I got to cut all these other expenses. There might be a way for you to get some relief on your property taxes.
The Consumer Financial Protection Bureau, or CFPB, recommends reaching out to the Department of Housing and Urban Development to see if you qualify for any programs or additional help.
All right. Let's move on to the next video that we've got here. I saved the link. Let me just go find that bad boy. Let me know in the comments. What are you guys thinking so far? Is there any new information or is this stuff that you already knew? All right, let's get to work here.
We got told we had to move in a hurry.
Times of distress, I have a tendency to be rather sarcastic because I always say I'd rather laugh than cry. And that was kind of one of those situations where you're literally throwing all your belongings to the street at one time. You're not being evicted and your wife's not kicking you out of the house.
Maurice Gutierrez lives in Naples, Florida. His house flooded in 2022 when Hurricane Ian made landfall on the southwest coast of Florida.
One of the strongest September hurricanes to strike the U.S. in decades.
Significant storm, again, a category 4.
The street will never be the same. You know, trees gone, neighbors gone, homes are gone. And here I am today rebuilding because I won't move. I love this place.
A year later, Maurice got a notice from his insurance company. They were doubling his premium to $7,500 a year. The year after that, it was up to a staggering $9,000 a year.
Now, on a fixed income retiree, that's not chump change.
So Maurice decided to drop his wind coverage. Now he's one of hundreds of thousands of Floridians that are going bare. That means they're living with little to no homeowners insurance in a state that is set to have a record hurricane season this year. And what's going on in Florida under Governor Ron DeSantis is a warning. This is what happens when a government capitulates entirely to the insurance lobby. We went to Florida to talk to other homeowners like Maurice. We found out that residents are being priced out of coastal communities, and sketchy insurance companies are thriving under DeSantis's policies.
It's essentially trickle-down economics, but for insurance companies.
And the housing insurance crisis isn't just a problem in Florida.
People around the Bay and across the state are now being told their homeowner insurance policies will not be renewed.
State Farm says they're discontinuing coverage for some customers.
Several major carriers are pulling out of Iowa and other states.
So this isn't just, hey, you're trying to buy a house or having a hard time getting insurance. This is you already own a house. Maybe you've owned it for a long time. And your insurance company tells you, we don't want your money. It is not enough for the risk we have to take to insure your property. Keep your money, keep your business. We don't want it. I know insurance companies are being called greedy. I don't claim to be an expert on all things insurance, so I can't sit here and say they're not. I have a hard time understanding how a business or an industry could be greedy if they're saying to you, I don't want your premium. I'm going to go somewhere else because your premium does not cover how much it would cost to rebuild your house if it went down.
Experts warn the collapse in the homeowners insurance industry could take down the entire housing market with it.
Should those systems start to collapse, or should that business model collapse, it could take down the entire American economy with it. It could take down the global economy.
The water came up to this line right here. At first, it's like, it can't get much worse. It can't get much worse. And then it's like, oh my God, when is it going to stop?
Maurice has lived in Florida for most of his life.
Raised in Miami, so hurricanes to us are, as far as I'm concerned, a weather event. You know it's coming. You prepare. You don't get complacent, but you get used to them.
Nearly 1 out of 5 Floridians is like Maurice. They've been forced to cut back or go without insurance.
That option allows me to manage my own risk.
Okay, let's back up and talk about how insurance.
Just got a comment. Are there situations where insurance is required for a house? Yeah, if you have a loan on it. Okay, if you're a lender and you're like, hey, I'm going to give you $500,000, you're going to go buy a house. And if you don't pay me back, I'm going to take back the house. We call that collateral. Well, if your house burns down and you say, I don't think I'm going to make that housing payment this month because I don't have a house. What's the lender going to do? They're going to have to go claim the ashes. They're going to go resell those. No, they make you have insurance so that you can get a loan to protect their investment. And so if you're unable to get insurance, you're going to be unable to get financing, or financing becomes way more expensive because now they have to underwrite the risk of the house burning down or having massive damage, and you walk away from it and say, fine, I don't want the house anymore. There's still money owed. Someone still gave you money to buy that thing that they have to collect back. And if we don't have insurance companies providing this service, what you're going to find is either people stop getting loans for houses. You have to have enough to pay cash for it, or they're going to charge you way more, higher closing costs, extra money every single year, or way higher rates and fees.
It actually works. Insurance companies determine premiums for you based on risk assessment. Generally speaking, the higher the risk, the higher your premium goes. They assess risk factors like the quality of building materials in your house, your neighborhood, what kind of dog breed you own, and of course, natural disasters.
So, if you have a wildfire risk in California and a hurricane risk in Florida, those two things are supposed to balance themselves out.
But as the planet warms and natural disasters increase, the insurance business model hasn't been keeping up.
And what's happening is that the risks of some of those perils, of climate-driven perils in particular, are increasing so much that the insurance companies are having a difficult time making the profit that they've always expected that they will make.
In response, major national carriers are raising rates and cutting policies. Today, 12% of people in the United States don't have homeowners insurance. Up the coast in Fort Myers, Florida, is Priscilla O'Hara.
Hi, I'm good. How are you?
She stayed in her home during Hurricane Ian, just like Maurice.
You guys remember when Florida used to be known as like the old folks place, the retirement community that everyone would go to when they were tired of the hustle and bustle of New York City and New Jersey and Boston? That's like what I thought of as Florida. Very different Florida today.
My son and I stood at the front door looking out the glass window and watched the rivers right over there, watched the water coming up, and here it's coming, nothing we could do. Here it's coming. And then the wind changed in about 10 feet from the house, and back out it went.
Her roof was damaged, but when she filed the claim, her insurer State Farm told her that her policy didn't cover wind.
I don't think we really realized that we were not covered for wind damage. Did not know that. I mean, hurricanes are wind.
The next year, State Farm dropped her. They said her house, which was built in 1976, was too old to insure.
I've been with them for 40 years, probably. It was a total shock, yeah. Oh, okay, this goes back. Well, he paid this in September of 2022, $881. So, I mean, they had our premiums on.
Just a reminder, if you guys like this kind of content, if you'd like to learn from me, if you want to learn about houses that I'm buying, things I've learned from buying them, areas I'm buying in, and exposure to the people that work for me and manage my property, short-term rentals, medium-term rentals, rent by the room, house hacking, if you want to be an agent and get some training, if you want to work in the real estate industry to be a loan officer, an insurance agent, whatever it is, check out SpartanLeague.com or DM me the word Spartan on Instagram.
All those years went in their bank account.
State Farm ended that year with a net worth of $131 billion.
Like a good neighbor, State Farm is there.
The roof damage cost her over $6,000, which she paid out of pocket.
Okay, you can tell a little bit. There's a little different shade. It cost us $6,292.
All right, let's talk a little bit about what you can do to keep your own insurance costs down. In certain cases like this, you may have to pay out of pocket. This happens a lot. I'm going to take a minute out of talking about insurance to talk about roofs, because roofs are typically one of the biggest things that insurance has to cover. There is a racket that is going on in the roofing industry. I'm curious if anybody who's listening to this on YouTube minds putting some comments here about their experiences, or if they work for a roofing company, maybe they could share some insight, because this is Real Talk Real Estate. When there's a storm, roofing companies know insurance companies may be legally obligated to replace your roof. So they actually hire college students or other people that don't make a lot of money, give them a bunch of flyers, drop them off in residential neighborhoods and say, go knock on every single door. Give them a flyer and tell them that we can get their roof replaced and we will get their insurance to pay for it. The insurance company says, hey, we'll send a specialist. The specialist goes to your property and finds every single thing that they possibly can to justify needing an entire new roof. Maybe you don't need a new roof. Maybe you need repairs. Maybe part of it needs to be replaced, but not all of it. But do they make as much money if they do that? No, they want to convince you the whole thing needs to be replaced. And there's something about a brand new shiny roof that's so much more appealing than repairing an old one. Do you want some new tires and a new timing belt and a new fender on that car? Do you want a whole new car? Well, what if the insurance company is going to pay for it for you? Of course, you think it's free money. Well, here's what happens. People do this. The insurance company take it in the shorts. They lose a lot of money. They have to increase their premiums to make up for that. You, the honest person who didn't go do that thing, has to pay more because of all the dishonest people that did it. And I'm not slamming roofing companies, but a lot of them do this. A lot of them are just genius marketers that know there's been a storm, or they find some way to get you to think you're getting a free roof. You're not getting a free roof. There's no such thing as a free lunch. You get no free nothing. It comes at a cost. You just don't always know about it. That happens in Florida a lot. A lot of people there, every time there's a hurricane or there's a storm, say, I need a whole new roof. I need a whole new thing. And so they end up getting hammered. The insurance companies do, which then they turn around and say, if you want us to insure your home, we need better windows, better doors, straps on your roof. They make you go spend a bunch of money to get the insurance at all because they don't want to have to pay for the whole thing during a hurricane. Guess what? Even though your insurance may not go up as much from that, you're going to pay all that money for the new door and the new roof and the straps on the roof and the new windows. And it's still a bunch of money. You see how this works? Every time we think that we're getting something free, you're not. You're going to pay for it somewhere else.
$6,292 to have it replaced.
Priscilla shopped around, but she couldn't find an insurer that she trusted.
I want a company that I know something about, not some company I've never heard of before.
That seems smart.
Yeah. If we had that roof damage, I could do it again, I guess. Don't want to, but I guess I could.
So what exactly happens to someone if they don't have insurance?
If you don't have insurance for your home, you might lose your mortgage or you might face higher mortgage rates. And worse, if you have a disaster and your home is uninsured, then you lose the value of that home or you face that out-of-pocket cost to repair that house, which could be hundreds of thousands of dollars or more. So it can be absolutely bankrupting.
Priscilla and Maurice have both paid off their homes. But if you have a mortgage, you have to have homeowners insurance. So for people who can't find insurance, Florida has something unique, a state-run, not-for-profit backstop that is actually the #1 insurer in the state.
Citizens Property Insurance.
Citizens Property Insurance, a state-run insurer called Citizens Insurance.
Citizens Property Insurance was established in 2002, 10 years after Hurricane Andrew hit Miami.
It's absolutely for sure, no question about it. It is going to happen tonight.
Hurricane Andrew was, at the time, the costliest hurricane in Florida's history, and it hit the insurance industry hard.
And the state was facing the prospects of incredibly precipitous economic decline, and they wanted to avoid that.
In 1992, Miami was a city of almost 2 million people. Lawmakers didn't want to see the city decline. So in 1993, they held an emergency legislative session and created what would later become Citizens Insurance.
And it was wildly successful. It did provide insurance to people who couldn't buy it on the commercial market. But more importantly, it reversed the flow of people leaving the state. It canceled the possibility of that exodus, and it led to enormous growth.
Citizens was supposed to be the insurer of last resort. But then the state was hit with a record hurricane season in 2004 and again in 2005.
So insurance companies were not insuring people's properties in Miami. This was 20 years ago. They wanted to stop people from leaving the state and leaving the area of Miami, wisely so. So they created this emergency citizens insurance company that would be state mandated insurance, that you could get insurance even if an insurance company told you no, because they wanted to stop bleeding and keep people from leaving. Immediately after doing that, the next couple years, they had crazy bad weather and storms, which led to excessive costs for this new company.
As more parts of Florida became uninsurable, Citizens expanded to protect more homeowners. Now, 1.2 million Florida residents have public instead of private insurance. This backstop is important.
If you start to lose insurance in a community, then the home values will drop as a result of that. And as those home values drop, you'll see people start to move away from that community and the tax base decreases. And as the tax base decreases, you have less money for schools, you have less money for infrastructure and fixing potholes in roads and so on. And you start to see this sort of spiral of decline, this negative momentum.
Nothing's free. You put money towards this, you have less money to put towards something else. Solid point.
Study from the Environmental Defense Fund calculated where the most money could be lost in tax revenue due just to increased risks of flooding. Homes in coastal Florida, they determined, could be overvalued by as much as $10 billion a year. And this whole video, you're thinking, well, luckily I don't live in Florida. Here's the national map. But the public model has a major flaw.
It's put more people in the path of risk, so it's increased their economic vulnerability. But it's also affected the way Americans vote. It's affected climate policy on a state level and on a federal level because constituents are not expressing urgency to enact policy to address climate change, to lower those risks, because they don't feel those risks.
None of this has stopped people from moving to the coasts. In 2023, a year after Hurricane Island were destroyed, but the town is rebuilding.
Did you guys see all those condo buildings? Crazy amounts. I have another video talking about let me try. I think I can remember the name of it. I talk about the Florida condo crisis. Just look at the David Greene show and look up in the show titles for the condo crisis in Florida. Could be a very, very, very significant event leading to a lot of foreclosures because of government regulation over imposing on these condos that did not have enough money to make repairs the state's mandating them to make.
Everywhere you look, there are cranes and scaffolding and large RVs where former residents are staying. We met with Lori Curry, a real estate agent who has sold property on the island since 2004.
I think when you drive here, you see the obvious changes from its original days when it was mainly a retirement community and a little less affordable for some of the original owners.
Lori says a lot of the smaller retiree homes that were built in the 50s and 60s were damaged, and they're being replaced by rentals bought by wealthy investors.
The people that came and bought at a discounted price, they knew what they were doing.
Many former residents struggle to rebuild. A report from Bloomberg said the building on Fort Myers Beach, especially with the new federal and state building codes, can easily start at $1 million. 8 out of 10 homes sold the first year after Ian were purchased with cash. It turned out that Lori and her husband had their own fight with their insurance company after Hurricane Ian.
They canceled us.
Yeah.
Yeah, they canceled. Yeah, they said they weren't going to, and then they did.
They'd had roof damage, and initially their insurer Edison would
Roof damage. It's roof is what I see coming up all the time.
wouldn't cover it. They ended up taking the company to court.
They fought us tooth and nail the whole way. So that's the mentality of the insurance companies. You know, they like to take your money, but they don't like to pay it off when there's a risk involved.
Lori and Ron say they were lucky. Because they had an attorney, they were able to get a new roof, and the cost of the attorney and public assessor was covered by Edison.
And that's the problem, is some people are very reluctant and reticent, and they're still suffering.
Oh, yeah, there's a lot of foreclosures. They're walking away.
So Fort Myers Beach is an extreme example, but Florida is in the middle of a housing crisis, and rising prices are impacting renters and first-time homebuyers the most.
We have been in an affordable housing crisis for years in Florida. The insurance crisis is making it far worse.
You might think the role of the public option, citizens, would be to keep these costs down, but there's a problem with that. Since the creation of Citizens Property Insurance, the insurance lobby has pushed to keep rates high.
The emphasis should always be to try to get those people into the market where they're paying the full rate and not counting on their neighbors to pay part of the tab for them.
The state initially required that Citizens be non-competitive, even as insurance companies kept raising rates more and more.
The insurance industry used to love Citizens, right? They love the idea of a last resort insurer where they can just sort of like leave the dregs, the most risky and unprofitable claims off on the public while doing the rest of the stuff themselves.
In 2007, after those record hurricane years, the state changed the rules. Citizens didn't have to be more expensive than private carriers.
Right now, these private companies are taking on all the safe risks where they are assured a profit and passing all the bad risk onto the state via Citizens Property Insurance Company.
The insurance industry hated that.
If you're in South Florida and you can get Citizens coverage at 30 to 40% less than the private market, you're going to do that.
In 2022, Ron DeSantis caved to the insurance lobby.
And we have to create an environment where people want to come in and compete for your business. You can't dump everybody on Citizens Property Insurance.
The Florida legislature passed a series of bills that would overhaul insurance law. And Ron DeSantis started depopulating Citizens Insurance. The goal was to kick people off of the insurer of last resort and get them back into the private market. But with so many major insurers denying coverage, customers are stuck with companies that are a lot more risky.
Yeah, particularly in the last 10 to 15 years, large national insurers, the kind that you would recognize from commercials,
We are farmers, bum, 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 bum,
have pulled way back for the most part.
And in their place are companies called domestics.
These are smaller in-state companies that tend to have far fewer resources. They aren't nearly as well capitalized. They're heavily reliant on reinsurance, which is insurance they buy for themselves.
Yeah, so in the episode that's coming out Thursday, if you're not watching this live, just go to the David Greene Show on Spotify or Apple Podcasts, or you can find it on YouTube too, and look up the episode with Landry Fields. We talk about what reinsurance is. It is insurance for insurers. So the insurance companies provide you with insurance if you don't have enough money. they have to go buy insurance for themselves if they don't have enough money. The whole thing is just a big web of inefficiency that makes it so easy for people that are buying insurance to commit fraud, and it makes it easy for the insurance companies to spread the losses around to the people that were trying to do things the right way.
DeSantis is trying to get new companies into the state, but he isn't being very discerning. Enter Slide Insurance, a startup founded by one of the lawyers for Enron. Yes, that Enron.
I knew that there were going to be mass insolvencies in Florida. So we raised a tremendous amount of capital to really kind of capitalize on market opportunities and provide new solutions to the homeowners.
The CEO of Slide Insurance, Bruce Lucas, was thrilled about DeSantis' changes to insurance laws. The new bills made it harder for customers to sue insurers over unpaid claims and created a bigger fund of reinsurance to protect insurers. That's the insurance for insurers. And most important, it handed Slide Insurance more customers. The Washington Post reported that businesses like Slide can cherry pick the policies they want, choose the properties that have the lowest amount of risk, and reject the ones in flood or hurricane-prone areas. Lucas laid it all out on a podcast called The Insurance Guys.
You get to cherry pick the policies.
Correct.
You are underwriting and cherry picking the best policies, leaving kind of the worst ones there.
Sometimes policyholders don't even know they're being pushed off of their plans. As long as the new policy is less than 20% more than Citizens premium, they can be forced off of their policy.
You send out these notices and it gets mixed in with everybody's junk mail. In the trash can it goes. Next thing you know, you've got 200,000 customers.
Last year, Slide was approved to take over 250,000 policies from Citizens.
The bad news, it's about 4.3 times what I...
So you thought you had an insurance policy that you liked. You got switched over to Slide without knowing that they did it. Your quote goes up 4.3 times as much.
Was quoted for Citizens.
The premium for the same level of coverage from Slide was $14,684.
You guys noticing $14,600 a year is like $1,200 a month? When I was first investing in real estate, like in Arizona, where they don't have roof problems, really, that seems to be the theme that comes up so often. I think my insurance was like $30, $35 a month. You have the cost of homes going up a ton, which means that the cost to replace them goes up a ton. You have the cost of labor going up a ton, which means that the cost to get the work done goes up a ton. You have the cost of materials increasing because of inflation. Now you have more of these natural disasters happening, and you have savvier people figuring out how to take advantage of insurance companies. And this is what you get: from $35 a month to $1,200 a month. And I'm not that old. We're not talking about that much time that has passed. Wild. What's going on with insurance? And none of the real estate influencers are talking about this. None of the big podcast hosts are talking about this. Wherever you're listening to your shows, they're not bringing people in to tell you information like this. That should scare you, because fear will motivate you to protect yourself. It's good. They keep trying to inspire you.
They've also swooped in to buy out policies from insurers that have gone bankrupt or left the state, like United Property and Casualty and Farmers Insurance.
This year, they provided a different option for me if I wanted to switch, called Slide Insurance. That sounds shady.
So just how risky is Slide Insurance? They aren't a publicly traded company, so it's hard to know all their finances. In interviews, Lucas touts the fact that Demotech gives them an A rating, but the more reliable Weiss ratings gives them a D+, pointing out that they have low liquidity and capitalization. Reporter Jason Garcia thinks Citizens should be expanded.
A public nonprofit insurer does not have to earn a profit. That allows it to charge insurance that is more affordable.
And two Florida representatives agree. Republican Spencer Roach, who survived Hurricane Ian himself, and Democrat Hillary Cassell, a former litigator for insurers, both think Citizens should be available to all homeowners in the state.
Think of this as the National Flood Insurance Program, but instead of at the federal level, it's at the state level. Florida, at some point in the future, is going to embrace the idea of universal wind coverage.
But they're up against a powerful political force that doesn't want to see Citizens expand. Since 2019, when DeSantis was sworn in, the insurance industry has donated nearly $10 million to DeSantis and the Republican Party. And the bills that DeSantis has passed...
I was waiting when this edge would come in. They haven't outright said it, but they made it sound like insurance companies donating to DeSantis are what is leading to these high costs coming up. They showed a very brief clip of him saying that what he's trying to do is bring more insurance companies into the state. If you're trying to make the most money, you try to avoid competition. If you're an insurance company, you don't want Governor DeSantis bringing competition into the state to make it harder for you. You want him getting rid of all your competition. He's recognizing that you don't want state-run insurance programs like Citizens. You want private companies competing for the business of all the people. That is how you get prices down everywhere. If there's one guy in town that knows how to hang drywall and you need a drywall person, you pay whatever he wants. If there's 50 people in town that know how to hang drywall and there's not 50 jobs, they're going to give you the lowest price that they are comfortable working for. You're going to pay less. You're going to get more drywall work done. When more drywall work is done, your quality of life goes up. More sheetrock and drywall is sold. That means that the companies that sell it are going to make more money. That means they can hire more people to work those jobs. And more people are employed, even if they end up not making as much money as they wanted to. So do you want a handful of people making a ton of money and a bunch of other people unemployed supported by the government? Or do you want a whole bunch of people making some money and not needing to be employed by the government and gaining skills and gaining reputation and gaining value so that later on they can make more money? Which of those do you think is healthier? Do you want 10 super ripped people at the gym working out and everybody else fat and out of shape? Or do you want everybody at the gym doing something and slowly getting stronger the longer that they're working out at the gym?
Since have almost all been handouts to the insurance industry.
The entire overarching strategy that Governor Ron DeSantis and the current Florida legislature have is to help private insurance companies make money in the hopes that benefits will trickle down to consumers.
Okay, so what does this all mean for the average homeowner or renter? Florida can prove as a model for what not to do. States should provide affordable not-for-profit plans for residents that can't rely on private insurance.
It's a risk, but I think it's one well worth taking. Paradise has a price. I'm hoping to live the rest of my golden years down here. I'm not going anywhere.
And while these major insurance companies claim poverty, remember that in 2022, the CEOs of the top 10 insurance companies made a combined total of over $130 million. There's one more layer to this whole story. Climate change is increasing the likelihood of disasters that are driving up risks for insurance companies. But those same companies are literally adding fuel to the fire. Public Citizens Ann Perot writes that insurance companies, including State Farm and Allstate, have major holdings in fossil fuel companies. State Farm is also part of ALEC, the group that has lobbied against emission restrictions. And for his part, DeSantis accepted almost $3 million from donors contributing to the climate crisis in 2022. And this year, he signed a bill that weakens environmental protections and bans construction of offshore wind turbines in state waters.
What I've found is people, when they start talking,
my understanding of these wind turbines, and I don't know, let me just put this out here and say I'm not an expert on this. I don't know. They're giving a side of the story, which is that DeSantis is bad for the environment because he's stopping wind turbines, which would obviously be good for the environment. What I've heard people say about these wind turbines is that they cause more chaos in the environment than they help. They're incredibly inefficient ways of generating energy. They were politically popular because it sounds like you're harnessing the power of the wind, which is free, and that's better than fossil fuels. And heck, I would have been on board with that. It's like solar power. Who's mad about that? But when you look at the practicality of the maintenance that they take, the materials that you have to use to make them, and the damage they have on the ecosystem around them, they're actually a net loss. I can't speak for him. My guess would be DeSantis recognized that and said, no, this is stupid. We're not doing it because it makes us look good. We're only going to do what works. He's a very practical guy, from what I've understand. He's being framed here like he's against things that are good for the environment because the insurance company paid him off, and they're making a tie between natural disasters leading to increased insurance costs. And they're kind of like, well, if he had approved these wind turbines, there would be less natural disasters and therefore we'd have low insurance, which logically falls apart, but they've sort of tied it all together to where that can sound like, oh yeah, that makes sense, which is the problem when you watch a lot of documentaries like this, is they can slip in their kind of other agendas into information that's normally good. So what I tell people when you're listening to this stuff is you want to chew the meat and you want to spit out the bones. You just got to be careful to pay attention to where bones might be.
about things like global warming, they typically use that as a pretext to do a bunch of left-wing things that they would want to do anyways.
This year, the United States has already experienced 19 weather events that cost more than $1 billion in recovery. We have to be honest about the impact of climate change, take efforts to fortify homes and cities, and start the work to transition to energy that doesn't use carbon.
All right, they slipped that in there. Take time to utilize energy that doesn't use carbon. I had this happen to me. I had to replace my roof. My insurance denied it and canceled me, so I had to hire a lawyer. And then once I fixed the roof, no insurance would touch me. Now Anthony has Citizens. All right, another couple short videos, and we'll be wrapping up today's show. Let's do it.
Up about California regulations. Insurers are fired up about California regulations, and they're right. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times.
Question, let me know in the chat. Do you want me to start dressing like Steve Forbes? Who here wants to see me in a collared shirt, purple lavender tie, and suit coat? Would you prefer that to the t-shirt that I'm wearing? Because I'm here for you all. I do this for you. I want to know, is this what you want to see? And will you subscribe to the channel, please, so you get notified when I'm going live?
California is facing an insurance crisis for homeowners as well as for commercial businesses. More and more underwriters are refusing to sell new policies. The latest is State Farm, the largest provider of home insurance in California and the U.S. It recently announced that it has stopped accepting new applications for all personal and business property and casualty insurance within the state of California. Existing policies won't be affected. State Farm isn't alone. Allstate, the fourth largest provider in the state, has ceased selling new home insurance policies last year. Chubb, AIG, and other underwriters have also been scaling back. These pullbacks will particularly hurt home buyers and small businesses, delivering another blow to a state facing a huge and expanding budget deficit. With insurance availability shrinking, would-be home purchasers can turn to the state's Fair Access Insurance Requirements Plan. FAIR. FAIR is a last resort, expensive, bare-bones insurance seller that covers mainly fire losses. Because the state's perverse, counterproductive regulations, FAIR plan enrollments have exploded, almost doubling since 2019. FAIR is supposed to be actuarially sound and is funded by assessments on private insurers. But typical of government, the plan has a big deficit. Combined with more desperate would-be home buyers turning to FAIR, this means more assessments on current providers, expenses regulators won't let insurers recover. What's happening in California should be a wake-up call for the all too many politicians and regulators who indulge in make-believe policies that end up inflicting unnecessary harm. Sacramento's sins here are comprehensive. Regulators have suppressed prices for years. Despite widespread wildfires, average premiums in the state of California are 1/3 lower than in other states with serious fire risks, and 2/3 lower than in Florida with its hazards of seasonal hurricanes. The state won't allow the cost of reinsurance, whereby risks are spread to other companies, a sound and essential business practice, to be priced into insurers' premiums. It won't allow premiums to begin to recover their gargantuan losses from the wildfires of recent years. California blamed the State Farm bombshell, aside from the usual charges of greed, to climate change. That rationale is a smokescreen for regulatory malfeasance. California's land management over the years has
me going on record right now saying, I don't know if I believe in climate change. I don't know if I don't believe in climate change. I have no idea about this. So I'm not playing this video because of any climate change related stuff. I just don't know. But I think that there is something to be said that he is pointing out how the inefficiencies in the insurance system are often masked by climate change, whether it's real or whether it's not. So we can acknowledge that climate change could be real, and it is also being used as a scapegoat for why insurance is going too high. Or you could say, I don't think climate change is real, in which case there's a different reason that insurance is going so high. But surely we can be smart enough to recognize it's not one factor. Inflation making everything expensive. And like he said, these wildfires, I don't know if you can blame wildfires on climate change. And frankly, I don't want to get into that pool and have everyone yelling at each other about it. Maybe you can. I think that most of the stuff that I've seen in California about the wildfires have to do with PG&E not doing a good job maintaining the grounds where their power lines are. And so that leads to these huge, devastating fires that make everything expensive. And as Mr. Forbes has said here, that leads to the government putting regulations on the insurance company saying you can only raise your rates this much, no more. Well, if the cost of the insurance has gone up this much because of all these wildfires, but they're only able to increase prices this much, what option do they have other than leaving the state and saying, fine, we won't deal with it at all. Insure your own house. It's not our problem.
It's been atrocious. Fires for decades have been aggressively suppressed, allowing the accumulation of underbrush that has made extensive areas open to devastating firestorms. The wisdom of indigenous tribes of the past in engaging in controlled burns to prevent such catastrophes has been ignored. Worse, California has been oblivious to what is done in other parts of the country today, particularly the Southeast. Fires involving millions of acres are not suppressed. The record in California for 1 year insured losses to wildfires is almost 30 times that of the state of Texas, and even more than in other states. The lesson is clear. Even in California, reality can't be ignored forever. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.
All right. Let me know in the comments what you think about that. But he is doing a pretty good job of pointing out that there is more going on to this than you think. And simple regulation saying we won't let insurance companies raise their prices, we fixed the problem, is incredibly lazy. And it's actually not an effective way of doing it. I am more in favor of DeSantis's strategy. Well, what we're told of DeSantis's strategy, right? We don't know all the details here, of trying to increase competition amongst the providers so that the one that's most efficient and gives the best service is the one that wins. That's really what's at the heart of capitalism. All right. Last video. This is the California Insurance Commissioner. And we're going to have to wait a second for the ad. But I thought this guy, he made some good points. Out of my state, California. He made a lot of sense. And so it's worth sharing, and we'll see how this goes down.
Follow-up today to an Eyewitness News investigation into California's insurance crisis, as State Farm announced this week that it will not renew thousands of property insurance policies in our state. Our Carlos Granda was able to talk for the first time with California Insurance Commissioner Ricardo Lara.
This is a real crisis.
Insurance Commissioner Ricardo Lara speaking out about what Californians are facing: higher insurance premiums and non-renewals. State Farm, which is California's largest home insurance company, says it will not renew 72,000 policies in the state starting this summer. Lara says he wants to look at the company's finances, but says it's a delicate balance to keep them in the state.
Insurance companies are not like utility companies. By law, they don't have to be here. And when we try to overregulate, we'll see what happened after the Northridge earthquake, when the legislature came in and tried to overregulate, and they no longer write earthquake insurance in California.
What that tells us.
All right. So he's saying that you are literally having insurance companies leaving the state saying, forget it. We don't want to play your game. I don't want to deal with this at all. And you don't have insurance options other than the FAIR plan, which is kind of California's version of what Florida has with Citizens.
Is the insurance commissioner's plan is not working.
Consumer Watchdog has been critical of Commissioner Lara as he tries to deal with these insurance companies. They feel there needs to be new laws.
All right. So like these watchdog companies, let's try to give them the benefit of the doubt. Maybe they're trying to do well, but what it sounds like is they've got an idea in their head made up of what the solution needs to be. And it needs to be mean to the corporations. You make them write insurance policies. You force them to give premiums to our constituents that vote for us. And I don't want to hear why you're not doing it. You do what I say. And he's got the wisdom here, at least from what it sounds like in this video, to recognize if I make them write policies or I tell them that they can't increase their premiums, they will leave. Now I, representing the state, I'm going to have to come up with a solution, which is going to be a state-run insurance company. And just let me ask you all, when you get a state-run anything, are you really happy about it? In California, we have the Department of Motor Vehicles, also known as the DMV. Has anyone ever had a positive experience going to the DMV? When you check into an airport and you go with the TSA to make sure we're safe, government-sponsored enterprise. Do you ever have a good experience with the TSA people? Not in California. I don't. Then I signed up for Clear. Clear's amazing. It's private. It's not that expensive. It's like $150 a year or something like that. And I get amazing experience. Because if somebody from Clear sucks, they get fired and they get replaced with someone that has a good attitude. They're fast, they're efficient, they're friendly. If somebody from the TSA sucks, they don't get fired. They get a performance improvement plan. They get a supervisor that has to talk to them that's probably their friend. They get the opportunity to sue if they get fired. You see where I'm going on? The government protects people so much that the consumer is the one that ends up losing. I don't want the state of California to be providing insurance. I want more insurance companies to be coming back here, competing for business, and I want them to get rid of the portion of this whole algorithm that is costing all the money. I don't want all these people that are building houses in areas that keep catching on fire over and over and over to make insurance so expensive that people that don't live in those areas keep having to pay more to subsidize them.
Been urging for years now that California require insurance companies who want to sell home or auto insurance in California sell to everyone who does the right thing and protects their homes. We urge the insurance commissioner to support that policy change, which needs to go through the legislature.
This is happening with a number of insurance companies. In addition to State Farm, Allstate stopped issuing policies to new customers in California back in 2022. Lara says his plan also involves changing the models insurance companies use to better assess risk and to lower rates for those who protect their homes.
The current modeling is a black box. We're going to change that to be much more transparent, bring the risk down in these communities. We keep insurers writing, then you get more insurers writing, you bring down the cost.
Lara says if State Farm does not renew your policy, notify the Department of Insurance immediately.
We will make sure we have an insurance expert with you so that we help you transition through and connect you with insurance companies who are writing policies in California.
Hello, I'm Mark Brown. Get more great ABC7 content by clicking the subscribe button.
All right, folks. There you have it. They're trying to fix this problem, but it's a very significant problem. Let's a couple of points that I'd like everyone to take from the video. First off, if you don't live in California and you don't live in Florida, that does not mean this problem will not affect you. If the federal government steps in to fix this problem, they rarely ever fix the inefficiencies. That's how business owners think. How the federal government usually thinks is, let's make it popular with voters and create a new department with a bunch of bloated salaries and inefficient operations that just increase taxes on everybody. Every time the government steps in and says, we will fix it, they do it worse than the private industry does, which is no criticism to the government. That's human nature, just like the difference between Clear and TSA. We don't want the federal government to step in and try to fix this insurance thing. Simply increasing regulation usually makes things worse. Just like the condos in Florida where the government came in and said, you have to fix your property so that they're safer, so that they don't collapse. And we don't really care about how to help it. We're not going to kick in any of the money. We're not going to speed the process up of helping you to get this done faster. We're not going to contribute any technological assistance and how you can do this cheaply. You just have to make these repairs. By this time, that turns into, boom, special assessments being levied on all the people that own the condos. They don't pay those special assessments. They walk away. Nobody wants to buy the condos because if you buy it, you're walking into having a huge special assessment levied on you. It leads to A, foreclosures in the condo world, and B, more demand in the single family housing world that already has a lot of demand. And now as you're pushed into that, you're getting these crazy high insurance rates. It's making everybody poor, which is another thing. Inflation is what's causing insurance rates to go up. It plays a big role in it. That's also making you poor. So if you're not paying attention to finances, if you got too comfortable in the last 10 years of printing money, now is the time to slap yourself in the face and wake up a little bit. You need to be paying attention to finances. You need to be paying attention. You need to have a budget. You need to read Pillars of Wealth, the book that I wrote that talks about how to save money, how to make money, and how to invest the difference. 3 different pillars to building wealth as opposed to just investing. I get that we haven't had to budget our money for a long time because the economy was so good and it was so easy. And I'm not exaggerating this. I'm talking about in Silicon Valley, an hour and a half away from where I live. I would go there and I would speak to the people at Google about real estate investing. Twitch headquarters, we're in San Francisco. I visited it. If you forgot your iPhone charger at home, Twitch would give you a free one. They would have a vending machine full of iPhone cases, iPhone chargers, headphones, whatever you needed that was free. You just go push F4 and it would drop out and you could have it. They had free food. Did you feel stressed because you were working too hard? They had air hockey and ping pong tables. And I would talk to the employees and they're like, yeah, as long as you get your work done, they don't care what you do. That was normal for a huge chunk of our population that would come out of college and make 180 grand a year as soon as they graduated because they were good with this stuff. Now we think that that's how every job should be. We've got a bit of a problem. So if you're not budgeting your money to sum all this up, now is the time to start because this stuff doesn't look like it's going to be getting any cheaper at all. Stop spending money on frivolous things. Appreciate you guys. If you're not already subscribed to the channel, please do so. If you're not subscribed to the David Greene Show, you can do it on Apple Podcasts or Spotify. And keep an eye out for the episode coming out with Landry Fields, where he and I dig even deeper into this topic. We talk about insurance. We talk about reinsurance. We talk about different kinds of insurance. We talk about natural disasters. We talk about how to have a conversation with your insurance agent to try to get a better deal, what areas to avoid, what policies to avoid. Lots of really good stuff. I'm here to help you with creating wealth through real estate, and part of that is saving money. So I appreciate you guys being here today. Leave me a comment. Let me know what you thought about the video.